when you have primary income, or say like T4 income, and then you have like rentals, the they add, they add that. Well,
Yeah,
now,
yeah. You can only use it one time. That's it. You
well,
cannot
more, yeah, the more that the rental income is supporting the mortgages, that's going to start essentially counting against you in a sense, and you're going to have to pay a bit of a premium to get those mortgages. And at some point you're going to run out of room. So it's really no different. If you have 8 or 9 or 10 properties, you're going to struggle like you're struggling now to get mortgages. But if you have like 3 or 4 and you want to get to 5, 6, 7, like those are the ones that might be difficult going forward to get, because a lot of that rental income is used to qualify. And the way the banks are looking at it now is they can only use so much of it to qualify. So it's just another way to tighten up liquidity. It's just another way to tighten up liquidity, which is exactly the opposite of what this market needs.
Well, the other thing that, and that will really play into this, the future supply issue, which is going to be like, is already getting choked down. But I think that rule change also was, let's say you have a rental offset for a rental property. Let's say that you got $1,200 a month rent. They'll use it, or some portion of it, on that, probably 50%, maybe 40% of that income against the property, but that's the only place you can use it. Like, they used to just look at a much bigger picture. My understanding of it is that, let's say it's that $1,500 or whatever the number is, that rental offset applies to that property. It does not go anywhere else. That's it.
I mean, in a time, what's fascinating is, I think these rules are coming from OSFI, and to me, this indicates, Patrick, the tail end of the. Now, I know you're saying that we're going to go into deeper recession. I get that.
100%.
But from a real estate perspective, the real estate cycle perspective, usually this indicates the tail end. Now, yes, it's got to rebound on the other side, but as it rebounds, if that liquidity comes back in the market, we'll be good for another bull run. But
it's going to be a while. We have to go back to what we've talked about a number of times, which is the fact that the banks have a lot of upside down paper. Their loan to values are all screwed. I mean, and that's not the term that they use, but ultimately they've got a lot of mortgages where they're underwater on those mortgages. And they know that, OSFI knows that, and OSFI is forcing the rule changes. It becomes really complicated going forward because nobody wants to build anything. Number one, they can't get mortgages. Number two, they can't make the math work. And when you start to realize that you can't build, with the costs rising the way they are, you can't build a unit for the cost that will sell it. Like, it's a real quandary that's happening. And by the way, it's starting to really ramp up right across the country. I mean, primarily BC and Ontario being the biggest markets, but it's happening. And these are the other problems that we're incurring with all of that, is the ultimate choke down of supply. So, in a future state.
it's always the same: too little, too late, right? Too little, too late, and then too much, and they go too far. So here we are. The market is already dying for liquidity, like literally gasping for liquidity. And now OSFI decides to tighten up liquidity even more. Okay. Now there's already, you and I have already talked about the future shortage of single family homes that are coming. Despite the build Canada better, we're going to build 500,000 homes a year BS. So all of this pressure is coming onto the housing market. It's about to hit. It's going to hit. And now they add more liquidity issues into it. And this just to me is an indication of what's coming on the other side of this, Patrick, which is even more upside, but you got to get through this downside. And that requires some real courage.
Well, that and some ingenuity and some paying attention and some liquidity. So right now, when you look at you're seeing some deals in you're kind of in that regions in those regions that you buy real estate in, but there's a lot of money sitting on the sidelines waiting for it to get worse. And ultimately, I think it's going to get worse. And I don't mean worse in terms of price. I think some prices will come off a little bit more. We negate the condo market because it's not something that we talk about or are interested in because it has never made sense from an investment point of view, given the way we look at investing in real estate. So lots of people made lots of money in that space speculating, and many got caught. But the point is that when we get into the detached, semi-detached, even row housing, they're not building a ton of it, and that is going to cause the problem down the road. To your point, but you're probably 2 or 3 years down the road before things start to get any kind of semblance of order. But in the meantime, we have to talk about what's going on economically, and at a global macro, it's just not good. It's just bad right across, and very few countries can brag about anything. And Canada's no exception. Depending on who you want to listen to and talk to about what's going on in the U.S. is struggling, but there's no question. I mean, we've talked about, and I've brought it up many times, is we joke about the canary in the gold mine, and when we look at what's happening with gold and silver, precious metals in general, platinum included, have you looked? Have you been watching what's going on since I've kind of tweaked your interest? Have you
Got my
seen what's
silver right.
happening?
Got my silver right here, Patrick. Got my silver right here.
Okay, so do you know what it would cost you to replace that ounce of silver today at a retail level, buying it, not
No,
spot?
tell me.
70, no, $81
Wow.
is what you pay for it. Spot price is 72 Canadian or something like that. I want to say 72. So you got a premium of $9 to $11, depend where you're at. And gold, and I mean silver's hitting record high US. It broke $52 US. Gold broke $4,200 an ounce US. That's 5,800, 5,900 Canadian. Like we're literally talking about hitting $6,000 an ounce gold. Now I keep giving you a hard time because I've been talking about gold and silver for, well, at least the 5 years that you and I have been really spending time doing this kind of work. But ultimately, we can see this coming, and I think what's happening, and people think, well, it's just gold and it's silver and it's a bull run, and it's this is literally, depending on, again, who you want to talk to. And by the way, I had Andy Scheckman on the REIN member meetings twice now, and if anybody would have kind of followed the plot, they would have been up about 80% if they would have bought silver, and about 50% if they would have bought gold at that time. Now, I know a couple of the members of the REIN community did. I already got PMs going, I wish you would have bought more. Okay, yeah, I know, I get it. Yeah, we always do, right? But it's more a case of, I don't look at precious metals as a investment. I look at it as insurance, and I look at it as an exchange of fiat currency for real money. So at the end of the day, what we're watching is the collapse of, and decoupling, if you will, of fiat currency. We've talked about it many times. And they're going to start QE again. US is starting. China's been going hard on QE. We're going to see a lot more
Q
QE.
just for everybody listening, QE is quantitative easing, when they flood money in the market and they add liquidity to the market. They're sure as hell not adding it in the real estate market. I'll tell you that right now, Patrick. That's where they got to put the QE.
It's not happening. And so, the economic conditions that we're facing are at a global macro. It's, Canada is just a small player in a much bigger world where every country is struggling. So, but anyways, what do I got to say about?
There's also though, Patrick, there's also the fact that you're right, it's a macro world. There's also major macro forces at play right now. If people don't know what we're talking about, they can watch, Ray Dalio's stuff on the debt cycles and so on and so forth. I mean, that the fourth turning is a part of that. The debt cycles are a part of that. I mean, the whole world is going through a step change. And we've been talking about this, Patrick, since 2022. We said this would happen. We told people this would happen. We're literally in it right now. And I watched this fascinating interview yesterday, and I want to ask you the question. But this gentleman was talking about how you're just talking about the decoupling of fiat currency from, and essentially the erosion of fiat currency and the whole decoupling of the monetary system, which is what's happening in front of our very eyes right now. If you know what you're looking for, you could see it. If you don't know what you're looking for, you have no idea this is happening. How do you feel? Here's my question for you, Patrick. How do you feel the fact that we're decoupling productivity from labor, which is what AI is doing? AI, artificial intelligence, is decoupling labor from productivity. First time this has ever happened in the history of our world. How do you think that will affect what you're talking about with fiat currency? Does it help? Does it hurt? Does it accelerate? What does it do? And I know it's a big question.
Yeah, it's a big question. Yeah, it's probably above my pay grade, but I want to go back and say one thing is that when we look at gold, for example, we think gold is getting more expensive when in fact fiat currency is having less buying power. That's ultimately what we're seeing. So when we talk about decoupling, and really what we're talking about is the buying power of the dollar continues to go down, connected to quantitative easing. So back to your point, I'd have to work through that in my own thought processes, JG. Again, I understand the question. I don't know what direction to take the answer to that question because, to your point, it gets a little bit convoluted in the conversation. So I know this is that when we look at GDP and we talk about productivity, the fundamental issue that Canada has been facing, and we've been again talking about it for such a long time, it almost sounds it's a little moot and talking about it and continuing to talk about it. But here's the thing: we didn't ever really have strong GDP over the past 10 years. Yes, that will get political very quickly, but it's not improving. So in other words, we looked a lot at consumerism driven by immigration, and then on top of that, real estate. So we had a lot of money moving and things were going and movers and everything was moving and shaking. Real estate, of course, shuts down. Now immigration shuts down. What is Canada left? And then we get new government in. Carney's supposed to be doing what he's doing. It hasn't changed a thing. He's probably some version of Justin, maybe worse. And he's just not doing anything. So ultimately, they're using tariffs and Trump as the fall guy and tariffs as an excuse, which has got very little to do with what's going on. Yes, there's going to be businesses that are affected by it, but we have to look at a 10-year window of what our government has been doing and not doing. And for example, JG, you know this. We talked about this a few years ago. Is that you probably have more gold in your office drawer than Canada has at all. Like Canada has no gold at a time when we should have been like every other central bank in the world. Like 90% of the central banks are loading up. Why? Because they want to get and they're selling their treasuries. They're not buying treasuries, so they're trying to disconnect from the U.S. as a reserve currency. So they're trying to disconnect from those dollars. So they're loading up on gold. They're getting rid of their U.S. dollars. That's the whole BRICS conversation, where Russia, China, Middle East, Ukraine. It doesn't matter where you go. They're moving parts around, and it's all to disconnect from the U.S. Canada, in the meantime, Carney just is. I don't even know what the hell Carney's doing. Does anybody know what Carney's doing? Which is to say, this is that when I talk about
maybe Carney's people listen to this show. Actually, I doubt it, because if they did, they'd probably make wiser decisions.
Well, no, then they would implement one of their newest, greatest bill proposals. Where what are they going to do? They're going to choke us down and kick us off the internet or something. I don't know. The freedom of speech is going away in Canada very quickly by the looks of it, if things go through the way they look to be going through. That's a whole other issue. But the point is around all of this, JG, is that Canada's not. It's a concern. It is a global issue. There isn't a country out there that isn't struggling big time with a lot of different issues. The tariffs being kind of front page news, but ultimately it really is what we've been talking about, and many have been talking about for a lot longer than you and I have, which is the obvious devaluing of fiat currency overall. With Canada, we're not doing anything to create that productivity that we need. We're not driving jobs. And matter of fact, our jobs are getting worse. They hang their hat on the fact that, there's 60,000 jobs in September. Okay, 50% of them were public sector jobs again. And of that 50%, I think 40% of it or 45% of it was in Alberta. So again, we're facing some big headwinds given our two larger provinces being BC and Ontario.
So let me recap. Recap is get rid of all your dollars, buy gold, buy silver, move to Alberta. There's the investment thesis.
There you go. That's what it is. I mean, it is sadly the reality of it is that I think that when I've seen what's happening and witnessed what's happening, because I pay attention to that, there's just no bright side economically short of maybe Alberta, and Alberta's not going to get away unscathed. That's for sure. But I think it's going to, everything is teeing up to be a real crappy economy the next couple of years. It will get a little worse before it gets better, the way things are going right now. And Carney doesn't seem to be doing anything in terms of, gosh, we just had another, what's the major?
He just went down there. He just went down there to kiss the president's ass there a little bit more. What happened? He kissed the ring, he kissed the ass. Like what's the result of all this?
Nothing, zero, zip. They still don't have a deal. So here's the thing about it all, right? Is that in Ontario, who's the major manufacturer? We have a slide on it. They just shut down. So they're moving to the US. 5,000 jobs in Ontario gone. They're moving to the US.
Oh, you're talking about Stellantis. Yeah.
That's just one of many. Look at the capital leaving this country and going to the US. If we pull up that slide, you can start to see that this is what's going on. And, it's just hard to be optimistic. Having said that, I think real estate, there's some brighter spots, at least in the end user space. But from an investment point of view, you're going to really...
I even get up in the morning, Patrick. I'd be so depressed if I wore your glasses on a daily basis. How do you even get up in the morning? How do you even get up in the morning? I mean, you must roll around in bed just like saying, "Oh, I don't want to wake up."
No. I'm like you. You said you couldn't find your rose-colored glasses. I found them, so I'm always looking for a brighter future.
Ladies and gentlemen, welcome to episode number 75 of REIN. And today we got some hot topics. We're talking about gold and how the canary in the gold mine might just be showing up again. These signals are global. Liquidity's in stress. We'll talk about that. We'll also talk about Canada's GDP and how it's an illusion, or is it? Is it even the right measure to measure prosperity of Canadians? We're going to find out. And then we're going to talk about housing supply. Is it too much? Is it not enough? Is there a myth of a housing shortage? What's happening? We're going to dig into the numbers, Patrick.
Well, speaking of housing shortage, as you recall, many cities in British Columbia and in Ontario said we need more units built, so we're going to change the footprint, and as long as it fits on this particular lot within these parameters, you can build whatever you want. Well, Burnaby is changing their mind about that, so we'll talk about that, and I think they're just the first in a long list of small towns that are going to have to change those rules. As well, we're going to talk about jobs, the lack of, not enough jobs to go around, JG. That's what's happening.
It's going to be a great episode. Let's rein it in.
Remember, folks, like, subscribe, comment, let us know what you think. We love your comments, and we will reply. So subscribe, like, hit the bell.
All right, Patrick, let's kick off the topic of conversation with gold. I know you're a big fan. I don't have any gold bars on my desk, but I do have some silver. So I got some precious metals here. I got some silver coins on my desk. So, but I don't have any gold bars. But you're seeing some Well, it's not just you. I mean, everyone's talking about gold. Gold is going through the roof, both physical gold and digital gold, called Bitcoin. At least that's what some people say. This is not investment advice. But there's a lot going on there, Patrick, and definitely gold just seems to be on an absolute tear. And not only central banks, but a lot of investors are absolutely loading up on gold. And so let's get into that.
Well, something, not a lot of investors and so first off, I started investing in gold, gosh, a dozen years ago. And, I didn't look at it as an investment. I always have tried to say, no, it's not really investing. It's an insurance policy. And ultimately, what I'm doing is I'm exchanging fiat currency, a promissory note, paper note, and I'm exchanging it for what some refer to as real money, which is gold. So for me, it was just another way to save money, as instead of putting it in a bank account and getting fiat currency back out, it was really investing or holding real money called gold. Now, you had to kind of adopt the thought process around monetary policy.
No, Patrick, sorry to jump in. Sorry to jump in, Patrick. I just need to explain it. When you say insurance policy, what you're saying is you feel that gold is a better preservation of capital tool than fiat currency because of the devaluation of currency, and fiat money is going away. It is buying you less tomorrow than it did today, whereas gold continues and carries with it. It inflates just like the rest of inflation, so it preserves your capital. And you said something interesting to me once, which I think is worth repeating, which is a lot of people don't look at gold as a way to get wealthy, but as a way to stay wealthy. And I think that's a very interesting. When you said that to me one time, I thought that's really smart.
Yeah, well, because that's really what it is. It isn't so much that this is why it's such an indication of what's going on economically, JG. I mean, Canada doesn't matter. Retail investors or retail buyers of gold and silver, precious metals like you and I, very few. Like you, I'm standing in front of crowds of real estate investors or people in general, and I'm often when I'm speaking and I'm talking about what's going on economically in the room, I'll say, "Is there any gold bugs in the room?" I've had rooms of 150, 200 people where nobody put up their hand. So when we start talking about everybody's buying gold, no, not everybody's buying gold. I can almost promise you that there'll be very few people. Put it in the comment. Do you invest in gold? Do you buy gold? Do you own gold or silver? Just out of curiosity, I'd like to know. But very few people actually do. So that's all to say this is that when we look at, I recently saw, Jay Martin, who does a great podcast, by the way. But Jay Martin, he said, yeah, gold probably go to $1,000,000, but he said your burger at McDonald's will cost you $2,000. So this is the thing about it, is that it isn't that gold is going up. It's just that our fiat currency, our currency, is just buying far, far less. And when we start to see gold and why it's going up is because other countries, their central banks are loading up, like record buying of gold by central banks around the world, countries. So the point of that is that what's happening is these countries are this fight with the US continues, and tariffs and Ukraine and Russia and the Middle East and China, all of the things that are happening, it is a flight to safety. Everybody, I'm talking about everybody as in the countries, other countries are really nervous about what's going on. They don't want to hold US dollars. And as a matter of fact, they're getting out of US dollars. So this is all to say that what we're seeing, and why we call it the canary in the gold mine, and we joke about it a little bit in tongue in cheek, is that this is an indication of the proverbial shit hitting the fan. And so this is a precursor. This is a, hey, everybody, pay attention. Things are happening. Countries and some sophisticated investors, some people that pay attention retail wise, guys like me, like you, who start to look at the economy through a different lens, are buying, and they're saying, okay, well, where do I put capital? To your point in the opening, is that, well, real estate's tough because liquidity is drying up. How do you invest in real estate if you can't get a mortgage? That's part of the issue. So there is a flight to safety. Precious metals happens to be one of those places that it's going. You mentioned Bitcoin. That's another place that it's going. But it's all to say that there's a lot of uncertainty in the world. not just in Canada.
Now, Patrick, I'm putting a graph on the screen right now of foreign central banks holding more gold than treasuries. That's only ever happened once before in 1996. Well, sorry, before 1995. Every central bank had more gold than treasuries. And then when they decoupled in early 70s, when they decoupled gold as the gold, they got off the gold standard, central banks slowly started getting rid of their gold up until mid 1995, around 1995, when then they started having more treasuries than gold. And now that has flipped again, whereas they have more gold than treasuries as of now. First time this happened, well, I mean, in 30 years.
Well, do the math. I mean, we just did. I think it was about 6 months ago to buy the average priced home in Canada in gold. I think it was 100 and I want to say it was 160 ounces. 100, yeah, something like that. 160 ounces, and now I want to say, well, just do the rough math. It's probably 100 ounces, 110 ounces at $6,000 Canadian an ounce. So there you go. What's the average price of a house? 600,000, 650. I don't know what the average price in Canada is, but ultimately you're starting to see this is an indication that our dollars are being devalued quite dramatically.
So, Patrick, I have another slide here I want to just put up on the screen in terms of the price of gold in the last year. So, essentially, a year ago, 38.61 an ounce. Now, like you said, well, geez, just on like 5,900 at the 58.95 as of the time of taking this chart, which is quite the ripping performance for gold, which is typically a pretty steady, matches inflation, outperforms inflation a little bit. But this is an aggressive growth in the price of gold, and it like you said, it matches the investors, sovereign wealth funds, central banks. I mean, we're talking about big players here and their flight to safety. They are exchanging their treasuries for gold, and that's what's happening. I mean, you saw it in the previous graph. I mean, that's essentially what's happening right now.
Yeah, and some people are arguing that it's not, the war that is all these wars, it really is a war against the US dollar. And that's what Trump's picking up on. So end of the day, this is all to say there's a lot of economic uncertainty. Canada is not going to come unscathed. And given what our Liberal government is doing or not doing, in this case, it's going to, it's going to be a little bit messy for the next couple of years. From a real estate investor point of view, we've been talking about it probably for the past couple of years, but certainly the past year, we're saying, now is not the time to be over leveraged. Now is not the time to not have liquidity at hand somewhere along the line. If you want to go in and put 5 or 10% down on a property, you better have a bunch of cash hanging around. Ultimately, we're going to see a softening in the market. We talk a lot about Alberta because Alberta was kind of riding the tide. Calgary starting to and has been feeling some pain. I think it'll get a little bit worse. But Edmonton's just going to start that ride. I've said it many times. We'll see over the next 12 months where we'll start to hear about Edmonton. Oh, it's maybe not such a boom cycle anymore. And for those who are in it, they're starting to notice the softening, by the way. Rents are coming down. It's taking longer to rent units out. And in 12 months from now, it's going to be even worse than that. So these are all things that are happening in the real estate market. You guys like you that are in it, where your development and it's kind of your business is that you're staying engaged, you're finding deals, but we were talking about earlier is that getting cash, getting mortgages is a tough game to play. What are you doing to get through it?
Well, I tell you, I think you just nailed it there, which is you have to be very wise. You have to be on your game. It's not time to commit to lower liquidity, and it's definitely time to keep as much liquidity as you can, for sure. And it's actually a really tough place to be, Patrick. And the reason I say that is because there's a lot of great deals. So, I'd love to eradicate the liquidity and just go all in, because I know that on the other side of this is going to be incredible. But in order to ride the wave and in order to get through, you need to have a bit of a war chest. And I'm not, that is the prudent thing to do. So frankly, to be totally honest, I am intentionally leaving some gains on the table and staying a little bit more liquid because, I never want to be in a position where I have to sell something, because that loss you might have to take on a property because you have to sell will outweigh any possible gains you may have made. So there's no point in putting yourself in a position where you are just you're just over leveraged and you don't have a war chest to go through. And I think it's interesting. This is just like that's my state of typically how I feel about things, especially right now in this market. What's interesting is I was watching a video of Warren Buffett's recently he did an interview. He's got 27% of his total assets in cash, $300 billion in cash, like in a bank, in cash.
Yeah.
Like it's just like that's incredible, and you're thinking like, well, I guess if it's good for Warren Buffett, it's probably good for me. So I felt pretty good about that.
Well, I think we have to follow the lead of some of those greats, whether it be Warren Buffett or Ray Dalio, you mentioned earlier. I mean, these are guys who have been playing the game a long time. That's what they do. And they're not liking what they see. And if you're a follower of Ray Dalio, I mean, he paints a pretty dark picture of what we're going into right now in this particular cycle. I mean, this is a cycle coming to the end of 100 years. And so he's even talking about reserve currency, US no longer being the reserve currency. The thing about all of it is it's and he'll say it himself, it's not a case of if, it's already dialed in. It's just a case of when, and we don't know when. So we're watching things unfold the way they unfold. And back to the gold, it's just an indicator.
The one thing though, Patrick, and I want to talk about, I want to ask you about oil prices, because you have been awfully quiet the last couple of weeks, but last couple of months about oil prices. You're typically always yammering on about how oil prices are going to go higher. So something tells me they haven't been going higher, because you typically be yammering on about it. But before I get to oil prices,
Yammering on. Oh, thank you.
yammering on. That's correct. You heard me right. But before I get to that, though, I must say the one thing, like I'm a huge fan of Ray Dalio. I'm a huge student of his work. And I think if you read Ray Dalio's book, and I think if you read the Fourth Turning by Neil Howe, and I think if you put, and I think there's one other book by Tony Seba that you read. I think if you put those three books together and you kind of create your own narrative there, I think you can kind of, to me, I can see where the world's going a little bit better. That's my philosophy. But the one thing Ray Dalio's um, theory doesn't quite hit on is the step change that's going to happen in the world as we go out of the last turning and into the new turning. This isn't just more of the same. I mean, the entire financial system is going to be rebuilt in the next 5 to 10 years, like the whole damn thing. So I agree, the US reserve currency as it stands today is probably gone, but I actually think the US is doing some very fascinating things as it relates to what they're doing with the altcoins and their digital laws that Trump is pushing through. I think that is very, very interesting. And I think that those are the things that Ray Dalio's theory may not take into account. But, again, who the hell am I to comment on these greats?
He's actually shifting that narrative a little bit, and I think there's a couple things around it. So Tether just bought however many billions of gold. So Tether altcoin. So there's going to be a gold backed altcoin. By the way, that's the intention there apparently. So when we think about the digital ID that's coming in, and that train has already left the station. It's not a case of if, it is a case of when. We saw them rolling it out in UK. It's not even an option, is absolutely mandatory. So that digital ID is going to change the banking system forever. That's all part of a bigger picture. So you said 5, 10 years. I 10 for sure not, and I even think it's a stretch at 5. I think certainly the 2030 agenda, I think, is going to be 2030 is by then we're going to be dialed in. I think it's going to be definitely digital ID, which will all play into the banking system, the convenience, of course. But the point of it is that's what's happening, and I definitely not 10 years, JG, 100% not. I think it'll happen definitely within 5, and I think well before the 5. I think even within the next couple of years, Canada be feeling.
What's crazy about that, Patrick, is you and I have been having these very conversations. I was talking to Mike about this yesterday, on the plane ride yesterday, coming back from Los Angeles. And like, we've been, the three of us, me, you, and Mike, and me and Mike, and our group of guys, so to speak, we've been talking about this since 2021. And I remember thinking, like, holy shit, that's like, this is 10 years out. But like, there's only 4 more years until 2030. Like, we're halfway through that timeline. This shit is moving quick now.
Well, it can, and it can. The digitization of all of this allows it to move that quickly. It's not going to be a smooth transition. It's going to be messy. There's going to be lots of controversy around it. And I mean, it's finally we're able to talk about it without somebody saying, "Oh, you're just doing a conspiracy," or "You're putting on a tin hat," or whatever the stories they have around it. I mean, think about me when I was having these conversations 10 years ago. It wasn't really until 2020 when the proverbial shit hit the fan on the pandemic that then we could start to say, okay, well, let's verify, this is actually unfolding the way it's unfolding, and things are going the way they're going, and it's happening. It's unfolding. We're in a very, I think it's one of the most exciting times, but I think also one of the most uncertain and even in some regard frightening times, because you just don't know what's going on.
Well, it's different, right? And you don't, especially for people who've had success in whatever industry, that could be scary. And I think a lot of people watch this show for that exact reason, because, Patrick, they have had success in real estate, they've had success in business, and they're not quite sure where the hell it's going, and it's scary, and I don't blame them. I mean, it's scary for all of us. But I will say that in amongst the chaos, and it will be a ton of chaos. I mean, if there's anything you can bank on, it's a shit ton of chaos. And that's actually what you're feeling. That's what everybody's feeling.
Yeah.
And the good news is, in all of that, is typically that's where the greatest opportunities live, is in that chaos. But you have to have your wits about you, because you have to be able to see the opportunities in that chaos, because the opportunities are there and the chaos is there. The question is do you have the vision to be able to see them? And the good news is that is 100% within your control and within everyone's control. You just have to be able to see it, willing to see it, and take advantage of those opportunities.
Well, there's very few people that are actually seeing it. I mean, ultimately, very, very few people. We think it's a normal conversation, and we're observing it because of the channels we watch, the people that we listen to. But the general populace, by a large,
no idea.
They have no
idea.
Yeah, they have no idea. And so they're not prepared at all. If you're listening to this channel, if you're part of the REIN community, then you're definitely at least having some awareness. And I'm encouraging everybody to kind of pay attention to what's going on, not just what you're seeing on mainstream media, because mainstream media is just not talking about it at all. So these are all things that are starting to unfold, and we got to pay attention to it. Okay. Where do we want to go? Oh, let's talk about oil.
I want to talk about oil prices. You haven't yammered on about it in a while. So what's happening?
Well, again, is that back when I was seeing where I thought oil was going to go, everything kind of supported that thesis. But what I didn't see coming, and most didn't see coming, was the downturn in China. So number one, it's all manipulated. I don't give a shit what it is. It's Bitcoin, it's gold, it's oil. It's all manipulated anyways. But ultimately what's happening is the demand side of the equation is way down from China. That's a big part of what's happening. We're going to start to see, now that we've got some kind of a deal that Trump signed with Middle East, we may see some prices come back. But I can say I will take the guidance of a few people that I follow who are very astute in the world of commodities and oil, and they're going, when oil hits $40, mortgage the kids and buy as much as you can. So that's what they're saying. So we'll see.
And now where's it now? It's 58 right now, roughly, like mid 50s,
something like that. Yeah.
You think they think it's going to 40s?
Yeah, some are saying 30.
Seriously?
Yeah.
Wow, fantastic.
We'll see. Buying opportunity.
Fantastic. But what's that going to do? Listen, you're Mr. Alberta. This must be scaring the shit out of the Alberta investors. I mean, I know Alberta's diversified its economy. I get that. But there's still man. I was in Calgary yesterday for lunch. I flew in there for lunch with a great friend of ours, Colleen and Bob, who I know watch this show, by the way. So hello to
Who do
them.
they?
Uh, they do watch the show. They were telling me they were watching the show like in the evening, like they pop the popcorn and then they just laugh at you and I. Like I think most people just laugh at us, Patrick.
Yeah,
That's
well,
what
I
I
do
think.
say they like a good comedy. That's what it is.
Yeah, but they were telling me they just took us around. We went for a phenomenal lunch, Bonterra, downtown Calgary. It was incredible, man. The food quality was awesome. Anyways, point is as we were driving around there, like the construction in Calgary is off the charts downtown. I mean, my gosh, every corner, every sites are just being developed, and it's like big building, small building, renovations. Seemed like a lot. I mean, that's what I felt like. It just seemed that way.
Yeah, I have no comment on what's going on in Calgary in that space. One is infrastructure, but you're talking what you said was buildings and stuff going on, and I'm not aware of what's going on in Calgary. I can't comment on it.
But what do you so but does it make you nervous, Mr. Alberta, that oil prices are projected to go to 40 and 30 a barrel? I mean, what the hell is Alberta going to do?
Well, I think that number one is that the cost of, I don't know what the hard costs are these days against the price of oil, but don't forget is that this goes back to something that you said many times, is that we look at the impact of technology, and the impact of technology on even oil and getting oil out of the ground. Like, costs have come down. I mean, they've gone to different areas, but the cost of producing is not as high as it was either. Now, I don't know where their break even point is. It might not be 40 bucks, but it's not as bad as, let's say, it was even 5 or 7 years ago.
And that makes a big difference, because if back in the day, and I don't know the numbers either, but if back in the day they needed $50 oil to make any money, and today they can make money at 30, that'd be fantastic. It'd be definitely a layer of security for Alberta and those
100%.
who invest in Alberta, which I'm one of, by the way.
Well, there you go. And I think too is that you got to keep in mind is that the oil issue is a manipulated thing. It's a big part of it is manipulation. So as much as it'll go down 40 or 50, it will come back up again. So I think that it's always, and a lot of these bigger corporations are prepared for that.
Um, Now, how do you? That's interesting, Patrick. I like where this conversation's going. Let's take it to building permits. Since oil's in the crapper, let's talk about building permits. Where's it at?
Well,
Where are
building
they at?
permits. Well, look at the chart. I mean, building permits are in the crapper too. This all, we developers can't make the costs work. And short of Alberta, Saskatchewan, Manitoba, Western provinces, costs are low. We don't have the same tax issues. So building permits, but even building permits in even Alberta have softened. So things are slowing down. That's going to speak to the unemployment rate going up, and there's just not enough jobs to go around in general. And then if you've got a bit of a slowdown in the construction industry, which you'll see in some parts of Alberta, definitely in Ontario and British Columbia, this is a problem. And this goes back to what we said even earlier. We've been hanging our hat on real estate for so many years. It just became normal. Like, this will go forever. This will just, back in the 70s, when I was in the oil industry, in the late 70s, early 80s, when oil was just humming along, everybody thought this will last forever too. And then along came Mr. Pierre Elliott Trudeau, who implemented the National Energy Program, and it was like, whomp, pull the rug from under everybody's feet. This is kind of what's happening right now to Canada in general, and that is that we were riding the whole thing of immigration and housing, and that's all been shut down. So we have an economic problem that's coming our way that we're not feeling the pain around just yet. We're only starting to hear about it. Let's put it this way, JG. We've been talking about it even with GDP. Our GDP in Canada has been flatlined for 10 years, but it's almost, I don't know what percentage of it, but a huge percentage of our GDP was just funded by our government. That is the fundamental issue that Canada's had for many years. We keep pointing it out. Others have pointed it out. People who actually have the ear of our prime minister have pointed it out, yet nothing has changed.
Well, it's there's no doubt building permits are definitely down. Interestingly enough, I had a meeting with my my city of Peterborough planning department, and it was a fascinating meeting. I met with them for 2 hours, and we went through in detail. And I have a couple observations, and I'll keep it relatively short. But one of the observations is, number one, the last time I met with them, which was probably 2015, 2016, I met with 3 old ass white dudes that wanted nothing to do with change or anything. Okay. That was 10 years ago. I met like this kind of meeting. I met with them again, 2 weeks ago. 3 very young people. I'm talking late 20s, early 30s. Very young. And I would say probably some they definitely don't have all the answers on how to go about this, but they had the willingness. And I saw something I haven't seen in many years meeting with the city zoning department, which is the willingness and the desire and the appetite to get more housing through and to increase density and to make it easier for investors to build. And that was quite refreshing. Now, do they have all the answers? Definitely not. Are they going about it the perfect way? For sure not. But at least they have the appetite and they're trying to figure it out. And that's quite a refreshing thing. So I was very impressed, Patrick. Another trend I noticed is last year, City of Peterborough included, the fees for things like zoning bylaw amendments, minor variances, the fees for these things went up astronomically, like up by 80, 90, 100%. It was stupid.
How does that make sense?
It makes no sense. You know what's funny? And I can't say Peterborough's not doing this yet, but some municipalities are reversing those decisions and bringing those fees back down. I mean, hats off to those municipalities. I know some of them are doing it, and Peterborough did reduce its I forget what kind of fee it was, but it was like $4,600, and they've recently rolled it back to like $4,000. So, and I know it's like, listen, I would rather it be zero. I get it, you and me both, but the fact that they're going down, not up, is a bit of a good sign,
Okay, but GG, sorry to interrupt, but I mean, how nonsensical is it got to get? Because we've talked about this, we talked about it before, so we'll just put a timestamp on this. They've got no choice but if nobody's building anything, they're not collecting any fees. So what's going to happen? They're going to have to increase property taxes, or they're going to have to tax it somewhere else. At the end of the day, if they've got no building, they've got no fees coming in. And they're going to struggle with that anyways, let alone, we've dropped it 10% or 15%.
Do you want me to tell you where they're getting it, Patrick? This is something I discovered, which is fascinating. So you know why they're dropping? Some of them, I can't, I'm speaking in absolutes here, but there's a lot of caveats to this. So I don't want anyone to get this twisted. But there's a lot of development charges, for example, in Peterborough, that they are now offering rebates and some stuff. Like, for example, in Peterborough, if you take a single family home and you created 4 units out of it, 4 units, that would be development charges on 3 units. Those development charges are about $45,000 each. Okay. Right. Crazy. Stupid. I agree. They're offering rebates on those development charges. Guess who's paying for that? Federal government.
Well, no, we're paying for it.
No, I know that, dude. I know that. But it's the federal. But I just want everyone to know the Build Back to Better Homes or whatever bullshit Carney's coming out with. That's how this stuff tries to flow into the municipalities. But you should see. So here in Peterborough, this is what my meeting was about. In Peterborough, first of all, city of Peterborough, 250,000 people. If you consider the surrounding areas, you know how much they have? The whole kitty, the whole pot of money for all these rebates, $800,000. I mean, I'll soak that up myself in about 3 projects. So, it makes no sense. So they have spent, I'm not kidding you, they have spent millions of dollars, no doubt, probably, on reorganizing everything to be able to administer this program. There's only $800,000 of rebates available, which isn't a whole lot when you consider that these development charges are $45,000 per unit. I mean, one of my developments in that I'm doing that's coming up, I have almost $300,000 of development charge. So I'd be able to soak up this entire budget by myself, which is crazy. So, but what's interesting is this is the part that's kind of good, Patrick. And I know that, I know I'm saying municipality and good in the same sentence, and that's hard to understand. But in order to put that money to work from the federal government, they've had to rewrite a lot of the local bylaws in order to make it happen. And the rewriting of those local bylaws is going to make it much easier for us to push projects through. So that part's really good. I'm a big supporter of that. So that's what my meeting with the city was all about, which is interesting. But I did see some really good things. And I would say, even though there's a ton of crap in there, most of the meeting was good. And most of the meeting was them wanting to build, wanting to get housing done, wanting to get permits through. And they know how dumb some of the laws are. And they are trying to change it. At least the 3 people I met with in Peterborough. So that's been my experience.
Yeah, I think that there's a couple things there that we have to give credit. There are individuals within these municipalities, within our government, that are really committed. They want to do the best that they can, but they have their own limitations within their own bureaucracy, and then they also have the limitations of their skill sets. These are not individuals who are boots on the ground. They may know which end of a hammer to use, or they may not. So there's also a competency level that we bump up against. So because we brought it up earlier, Burnaby was a great example. So Burnaby just recently, there's a whole article about Burnaby changing. So where they changed it to saying we need densification, we need to get more units built. So whatever the lot size is, if you can fit it within this lot, you can build whatever you want to put in there, a 4-plex, 6-plex, 8-plex, whatever it is. Well, in Burnaby, they went, hold on here. It seems we had a slight oversight. So they're having laneway homes that are 4 stories high. So how does that appeal if you're on a 0 lot line and you're the neighbor, and all of a sudden you have a 0 lot line, a coach home in the back or on the property that's now 4 stories high, because they're going higher because they can't go wider or deeper. So these are all things that, small oversight. I'm assuming nobody thought that some developer would do that. But of course, if you're a developer and you're going, hey, why don't we just go higher, get more units, and cash flow like crazy? So these are decisions that are getting made. So I think you're going to see that unfold. Like, I don't know what your rules are in Peterborough, or some of the areas that you're building in. I mean, look at that particular unit in that picture, right? So that's a little bit of a disaster and a big oversight because nobody is equipped to actually have the foresight. They would never think of that, So you, as a developer, you would think of that. You would maybe, if you're putting, if you're shifting that zoning bylaw or zoning law, whatever you want to call it, that bill, you would maybe think of that. They don't.
Yeah, it's
it's
interesting, Patrick. Yeah, well, for sure, and I know that you couldn't do something like this in the markets I operate. You wouldn't be able to do something like this. The zoning bylaws wouldn't allow it. I mean, you'd have to, it wouldn't allow it. So,
it's a Vancouver
thing. Well, I don't know. It's interesting. It's not. It's a Burnaby thing, which is its own municipality, right? So it's not even a Vancouver thing. It's just like Burnaby maybe adopted some.
I think same rules right across Lower Mainland. I'm pretty sure.
Is that right? Yeah.
Yeah. Somebody can comment.
Now, one of the things, I'll tell you another thing that's come about, and I don't want to beat this to death, but another thing that they've removed, which, I'm in support of this. I understand it might have some, I'm just in support of it, which is they have removed, unless it's a level 4, they have these new levels, level 1, level 2, level 3, level 4 zoning bylaw amendments. And unless it's going to a level 4, and there's criteria for each level, unless it's going to level 4, there's no more ability for the public to comment. So NIMBYism is out. People can't stop it anymore. If you fit in the box, that's very clear. They're going to let you do it, and they will not consider the NIMBYism can't. If it's big enough where it needs a level 4 approval, then that's a different story. And then the public will be able to comment, but that would be significant. So that to me, that's one of those changes that makes it a real difference, and it's going to be very good. It's going to help streamline projects. So this is another example of a good thing. But yeah, for sure, some municipalities are going to make mistakes and they're going to have to roll it back. And you know what? There's nothing wrong with that. That's okay. It's part of the process. At least we're trying something. So I like that.
All part of the process.
All right, Patrick. So I think we should talk about some GDP. We'll talk about GDP, and then I think we should talk about some economic indicators and some very interesting kind of economic charts we have that we're going to show unemployment, so on and so forth. People always love the numbers, which is good. That's what we tell them. Focus on the numbers, look at the numbers, make data-driven decisions. So good on you guys. But let's talk GDP first of all, Patrick. I got a chart here on the screen of the G7 real GDP per capita. Canada absolutely failing in a big way. We are underperforming the G7 in a big way. And you could speak to this chart if you'd like, Patrick. But I want to consider, is GDP even going to be the way to measure an economy into the future? In fact, should we have stopped measuring an economy by way of GDP like 20 years ago? Most likely the answer is yes. But what do you think? And what do you think is going to be the next measure? Because GDP sure as hell isn't cutting it anymore.
Well, I think it's only one part of a bigger picture. It used to be, I think, a more relevant number, a more important number, but now it's like many things, it's manipulated. In Canada's case, our GDP has been driven by our government. Let's face it, you look at what was happening, and it does go back to 2015. That was a government change. And I think, if anything, one of the things that we look at in a real estate cycle, and we talk about the influencers versus the economic fundamentals. And I don't know what we're going to categorize government now, because it used to be an influencer, but the way government is unfolding, the way things are I'll use unfolding, the way things are going forward within the government. Let's face it, GDP in Canada is driven by our government. That started back in 2015, and that hasn't changed. So it's been basically a 10-year better run of nothing but kind of 1%, 1.5%. They say it's higher, and then it comes in and they put in a correction. But the only thing that's been driving it is, and even with our job market right now, when we look at the unemployment, is so many government jobs. We don't have a strong public sector. We're not particularly productive. So what does GDP mean to Canada? I don't know. It's starting to lose any form of measurement. Like, what do we say about it? For those who are paying attention, to say we're not in a recession, I guess technically by the numbers that we get, we're not in a recession. But when we look at, let's say, the numbers of the food bank, look at the numbers on that food bank chart, JG.
It's crazy.
It's crazy.
I couldn't believe that.
Yeah.
First of all, they're projections, but even the fact that it took us 38 years to get to 1 million food bank visits, and then we went from, we went very quickly from 1 to 4 million, and now they're projecting up to 32 million. But those are just projections, Patrick. The reality is it's still a lot. It's still too much.
But we went from 1 to 4 million. Those are real numbers. That's not a projection. And fundamentally, these are the things that, for example, when we're looking for indicators as investors, when we look at real estate, I don't care what you're investing in, but because we talk primarily about real estate and we're looking at real estate, we have to look at the data that we can kind of measure what's going on economically. And this is a measurement in real time in what's really going on. And that is that people are upside down. And as many people may be working, JG, the cost of living has gotten so high that individuals don't have the discretionary income. So even if housing prices come down, JG, even if they come down a little bit more, and we've got a chart on housing prices, they haven't come off as much as some people think they have. They certainly have from all-time highs, but in the actual, when you look at the trend of real estate, they're not down that much relative to the overall trend of many years. My point of it is that even if housing prices come down more, affordability is not going to change. This goes back to what we've been talking about this whole part of our session, this particular pod, is that we're seeing very clearly that we're losing buying power. Our fiat currency, our dollars are buying less. And if you're trying to afford a home, your discretionary income is not keeping up with the rate of inflation. And so affordability isn't going to get any more affordable anytime soon. And that's kind of a story that people are living into. If only if interest rates come down and prices come down a little bit more. No, as a matter of fact, if interest rates come down anymore, we're going to see even more inflation, believe it or not. And affordability isn't going to get any better. Discretionary income isn't going to improve. So people are not spending money. They don't have money to spend. And so it's just not a good economic picture. This goes back to what I said in GDP. We can look at GDP and go, well, it's pretty flat. We're not technically in a recession. And then you look at this chart around a food bank and you go, yeah, we are.
Yeah, for sure. It's definitely not good news, Patrick. Not good news, that's for sure, on the food
I
bank
look,
side of
JD,
things.
I gotta say, I look for good news. Like I scour, I look, I go. There's got to be some good news somewhere. Yeah, no,
Well,
not really.
here's some good news. Um, s- Unemployment. Some provinces got better at unemployment. I mean,
Yeah,
look at Alberta. Alberta's
yeah,
down 0.6%.
yeah.
It's one of the only ones that's down. Quebec. I have no idea how Quebec's unemployment is still 5.7. I mean, what? Well, the government's probably feeding the shit out of that machine.
Yeah. Oh, it's like almost like a different
So
country.
let's be clear. I know you want to say it as an Albertan. I know you want to say it. So the Quebec government is taking the money they get from Alberta transfer payments and they're hiring their own citizens. That's what's happening. Just so we're clear. Like, let me say it for you, Patrick.
Well, that's just the way it works. So the point of it is that I think the more important issue is that BC is not getting better, and Ontario is going to continue to get worse. And because those are two big provinces in the scope of where they fit in Canada, that's not adding any good news to the overall economic picture. And so we will feel the effects of Ontario slowing down. We will feel the effects of this capital that is leaving the country. If you pull up that site, oh yeah, and population growth. Look at the population growth there, JG. I
I know.
mean, it's
It's down to nothing. I mean, it's
nothing.
they pulled it back.
That's a classic example of what we say before, how government works. They're so not on or in it. Like they are so reactive a year later. It's like, oh, they wake up, oh, look at these numbers. We should do something about that. And it's really the squeaky wheel gets the grease. So
I
there's
think
the
this is the chart, eh, Patrick, about Toronto. This is Toronto specifically, but you're right, and I think many charts would look the same. And this is just a good indicator, Patrick, that you're right. Prices have come down. They're not nearly back to what people think they are, but they've definitely come down for sure. They've been trading sideways for a while.
Yeah, exactly. So they're down quite a lot off of the all-time high. But even if you do technical analysis, you have to kind of take out the highs, take out the lows, consider the trend, and the trend continues to be up. Now it may go sideways for a while. It probably will go sideways for a while. I would actually think it is. I think that as investors, we got to continue to push and look for cash flow and make deals cash flow and worry about appreciation later.
Well, that's not our advice today because of the situation, and that's been our advice for how many years? 30 years we've been
I
saying this
know,
now.
but that's us. But many investors, I've talked to many investors, even over the past couple of years, in rooms where they're going, nah, I'm not so concerned. I want to ride the appreciation. They don't want the long term gain. They want give it to me now. I want money now. So they don't have the
But
patience.
what's interesting is there's a little note on this graph showing, the annual price growth, if you look at the long-term average, is just under 6%. And just so everyone knows, as we often say, Patrick, you need if you get 3% price growth, price appreciation year over year in a market that you invest in, you
Home
are
run.
going to crush real estate. I mean,
Home
absolute
run.
home run. So
Yeah.
you don't need, and that's what I've been saying this to people, like, you don't need 8% or 10% or 12%. Like, you don't, that'd be crazy. It's unsustainable. When it was going up like crazy, Patrick, during COVID, that you and I were yelling from the rooftop saying this is unsustainable. You do not need these kinds of appreciation to do well in real estate. And now people are giving some of those gains back. So, but overall, you're still doing very, very well.
Yes, 100%. And again, when we say it every show, is that given what's happening in the world of currency, we need to own hard assets. Precious metals, Bitcoin, real estate, hard assets. Many are sitting on the sidelines in the real estate world. Those are decisions that you make. Pay attention. If you stay liquid, there's going to be deals to be had for sure. So I'm not suggesting that you go out and force the river in the world of real estate, but stay engaged in that game and continue to watch it, because there will be opportunities that show up. I know some people are really feeling the discomfort of having real estate, and it's a little upside down right now. So they got some concerns with it. But we have to look at what's going on economically and then say, where do we put our capital? And then we also have to consider, JG, even when we think about what's happening in the world of digital currency and where this might go and the uncertainty around that and the control that the government's having. And I mean, there's all sorts of crazy stuff going on. That one thing is for sure, for certain, is that if you follow the big money, I mean, those players that have hundreds of millions of dollars, they're saying time and again, keep as little money in the bank as you can get away with. It's at risk in the bank. So whether you believe that or whether you think that's too extreme, whatever it is, we have to, and we can't deny what's going on in the world of inflation, the cost of things, and we have to be able to put our capital to work. Real estate still continues to be one of those places to do that.
Now, Patrick, I want to talk real quick about, the liquidity crisis that you and I keep talking about. The banks, we've been saying for a while, and it wasn't just us, a lot of people have been saying for a while, that the bulk of mortgages are renewing in like 2026, and we are now approaching 2026. And the data is starting to show up now that there's definitely some pain in the banks in terms of mortgage arrears. You can see it in this graph. Like, mortgage arrears are up 20%, 30%, 40%, up to 60% for National Bank. BMO is up to 55%. So these arrears are not out of, like, if you look at the total number, they're still really, really low. But the bank doesn't care how low they are. The bank just cares, like, holy shit, we're 50% higher than we used to be. That's what the bank cares about. And then they start to clamp down, which is what we're feeling right now in the market. And the question I have for you, Patrick, and I think this is showing up in the bond yields. You can see kind of this nice slow progression down from 3.15% down to now it's like 2.64%. And hopefully this continues to go in the right direction. And the Bank of Canada helps that by lowering rates. Hopefully we go into 2026 with half a point lower than where we are now. This is time for your Patrick prediction.
No, I think we're going to have a show before the announcement. I think rates will come down, but I think it's going to be, so first off, they go back and they talk about, well, so there's a 60% chance is what the cards are saying in terms of a rate decrease in October. So at the end of this month. So 60% chance. And that changed because they said, oh gosh, we produced 60,000 jobs. And then as soon as you unpack that a little bit, you realize that 50% of those jobs, again, were public sector jobs. I posted something on X and, come at me, oh yeah, like we don't need police and whatever else they were talking about, ambulance workers or whatever. My point is like going, well, no, that'd be great if that's who they actually, that's who they put on the payroll, but it's not who they're putting on the payroll. And therein lies part of the problem that we have. So again, when we unpack those numbers, we go, well, jobs increased 60,000, 50% of them were public sector jobs. That's not a healthy economy. And so I still think that they're going to have to lower rate at least another quarter point. We will pay a price for that. It's a trade-off between, do we let the economy crash or do we let inflation run? And they'll do QE, so we'll start to see assets come back up again. I don't know. I think they're going to
I
get down.
still think the Bank of Canada, they put it right on their website. They're all about price stability, meaning inflation. They will favor less inflation and they care less about the economy crashing. At least that's what they publicly state. I understand the tin hat falls.
What's your read? Are you saying increase or decrease, decrease or stay the same? What are you saying?
I think they're going to decrease. I think they're going to decrease quarter point.
Yeah, it's kind of where I'm at.
Yeah,
We'll
I
see.
think they're going to decrease quarter point. But
We've been wrong before many times.
oh man, yeah. I mean, this whole show is about us being wrong, isn't it? I thought this whole show was about. But I'm just kidding. But the bond yields, bond yields are trending in the right direction, which is good because I got 2 mortgages I want to renew. I just got. Did I tell you I got a couple mortgages at 3.99%? Fantastic.
Yeah, it's really good.
3.99. I'm like, and I'm like, let's go variable. Like, let's ride this wave. I mean, we rode that whole freaking wave on the way up. Let's ride it on the way down. So, okay, last thing, Patrick, we should wrap up this show. Talk about some YouTube comments. We have been getting fire comments, really good comments. People are listening. People are paying attention. People are smart, and people are putting in good comments. So, Patrick, I love it. Let me read off a few. I'll start by talking about kind of the first one here, which is this is Rachel K8368. Imperial Oil is closing its operation. AHS is laying people off. It's very challenging here for people to find work. Don't move here until you have a secure job. I think she's talking Alberta. She's talking about that.
Calgary,
Yeah.
dude, Imperial Oil, that was a big shutdown. Like, that's big.
Yeah. But I think you've talked about this before. You've talked about how there are a lot of jobs, there's a lot of stuff, but there's a lot of people, and there's more people than jobs. That's why the unemployment rate is so high still in Alberta, right? I mean, you've said this before.
Yeah, 100%.
Yeah. So, but thank you for that comment, Rachel. Fantastic. Mike Smith, I love this one. He says, the most ridiculous thing is that all of this is unnecessary. Simply, it's like you must know Mike. Mike must be Patrick Francey's biggest fan. I don't know. Mike says, simply allow Canada to do what it does best, extract and develop natural resources, and things will get rolling again. Maybe not in the condo markets of the GTA and Lower Mainland, but in much of the rest of Canada. I think Mike, are you paying Patrick? Are you paying Mike Smith to comment on this channel? Is that what you're doing?
Well, let's put it this way. Canada is resource rich, but we have leadership that has a whole different agenda, a whole different way of looking at the world. So all of the things that we can produce, including gold, by the way, we don't nearly export as much as we can, not even close. So what have we got to say about that? From fuel to fertilizer, oil, special, like lots of like agriculture. I mean, we have so much to offer, yet we don't. So I can't explain it.
Let's vote for Carney again. Let's vote for Carney again. Sorry, I just went there. I should know it there. Okay, James Cameron 204. This is interesting. And James, we talked about it on this episode, so thanks for mentioning this. CRA income verification, stop the mortgage fraud and fake income documents. No talk about the mortgage rules coming in 2026. We talked about it on this show. Way tougher to get financing for multiple properties. And James is I'm not saying James is wrong, because James isn't necessarily wrong, but it's not going to be tougher for everybody. But yes, some people who heavily rely on their rental income to qualify, it will get tougher for those people, which is again another slap across the face, Patrick, to real estate investors. You know, those damn greedy investors, the damn bad investors that were propping up the entire real estate market and making shit happen for the entire country. Remember those damn investors? Oh yeah, that's us. Well, yeah, they're making it a little tougher for us, depending on where you fall into the income bracket and depending on how much you rely. So James is partially right on this. So anything on that, Patrick?
Well, he made an interesting comment around the CRA. So fraud has been a huge issue, and in the mortgage world, and not, by the way, not just with investors, but with homeowners as well. This goes back to the one comment we made earlier around digital ID. So once digital ID is up and running, it's well on its way. Canada's already got it handled, by the way, just so you know. You may think they don't, but we do. Canada does. That's right on their website. You can find that information. The point is that all of this will be connected to CRA. So income verification, no problem. All in the convenience of your phone and whatever other information they got.
When are we talking about digital ID? Like when is this going to be a feature on the show? Next episode?
We could do a whole freaking show on it. So don't get me going on it. Okay.
We should. Okay, last one. McCall, MCHAHAL 22. It will be, then this is interesting. A lot of people have this, and I know why people want this. I'm sorry, it's not going to happen, but a lot of people want this, so I wanted to talk about this comment. It will be great if real estate crashes down to make young people able to save and buy a house to live in. Real estate markets are valueless activities. Buying and selling real estate does not add any productivity of the nation. I don't agree with that. Governments in many countries have made real estate into a GDP driver. This will hollow out the economy in the end, like Japan, and make younger generations poorer and poorer. Patrick, your thoughts on this? This is a good one. I thought
Well,
we'd finish with this.
let's face it, he's not wrong. Or they're not wrong, he or she, but ultimately they're not wrong. When you're building, yeah, there's some productivity there because people are working, there's real good jobs. You're building infrastructure to support the building, but once it's all done, it's done. And there is a limit to what you can do. So building within, having a country that's totally dependent on itself to support itself is not a winning strategy. So you have to be able to, this goes back to what we've talked about many times. We have to produce goods, we have to export goods, and whether we produce them because we dig them out of the ground or whether we produce them because we manufacture them here, that's not happening in Canada. And as a matter of fact, as we talked about earlier, our manufacturing and a lot of capital is leaving Canada, it's going to the US, it's going to other parts of the world. This is really kind of a tough time. This is a tough time. He makes a very good point.
Yeah, I do agree, Patrick, that, and I do agree that we want to be more productive as a country. We want to be as productive as possible. But what I don't agree with is, yeah, if the thought is you buy a condo and you just sit on it and then you resell it for $500,000 more, I agree. There's not a whole lot of GDP created there, but that's not what most investors doing. That's not what most real estate does. Most people that buy a house and they put time, effort, energy into that house. They buy goods, they buy services, they buy product, they buy material, they hire people. So it's actually a huge part. It's a huge GDP driver in many different ways. So I don't agree with that part. Now, should it be too much of the GDP? I think Canada at one point it had like 10, 11% of our GDP. That's quite a bit. It's now back down to, I don't know how much, Patrick, maybe 7, 8%.
It was at one point almost 20, by the way. So again, it's just not enough. It's the only thing we had to hang our hat on, and it just, well, we're about to pay the price.
Any country that hangs their hat on just one thing is really dumb, and we've been that country. So congratulations, Canadians. Vote different. vote differently next time. But the reason I say that I still don't see real estate crashing down. It's just the way that the financial system is levered and hinged on and backed by real estate. Don't forget, real estate across the globe is the largest asset class, and not by a little, by a landslide. You can put all the stocks, all the bonds, all the crypto you want in there, all you want, and real estate obliterates all of it. Everyone's wealth is hinged on real estate, all of it. So there's no way there's no way that's going. There's definitely a floor to the asset value of that real estate because of that, and that's my counter argument to that.
I got you.
What a heavy finish, Patrick. Heavy finish. Well, Patrick, that's a wrap on episode number 75. It's been awesome. So thank you for a great episode, and I look forward to the next one.
Me too. Let's rein it in. If you enjoyed this episode and you want to hear more of what JG and I have got, check out our last episode. It was epic.